Lyft stock is skyrocketing here after hours, up 17% after an earnings report. Well, this is a highly anticipated one. As we all saw, there was going to be a lot of fear regarding the ride-sharing industry, and I think you saw that in the last month. Here, really, overall in the last week, stock down 20-something% since then, so pretty wild. If you look even year to date on this stock, it's one that's down 40%, as I think a lot of people anticipated some bad earnings. They lowered their guidance quite a bit, but if you look, quarter one GAAP EPS of negative $1.31, beat by 5 cents. Again, it's an ugly number. This company's not profitable at all, and this doesn't help it. But interesting to look at. Revenue of nearly $1 billion, $955 million, up 23% year over year. Still beats by $125 million. And again, those are off revised estimates too. So that's a very nice beat, all things considered. One thing I will just 100% say right off the start, they beat for a couple different reasons. Obviously, they didn't see as much impact as a company like Uber likely is. So Uber's got a lot more global outreach there. So they see a lot more of a global market. Lyft is entirely going to be United States. So for Lyft here, they didn't get that much of an impact from this. Probably maybe a month, let's say, of their quarter was impacted by this. So the concern, though, is going to be how ride-sharing looks after this. Obviously, there's really a lot of reports out there that ride-sharing demand is definitely down quite a bit. And even after this, it'll be down quite a bit even more. So I think the concern, obviously, is what does it look like next quarter as opposed to this quarter? But I think it's still important to look at these numbers to see what they say. It's pretty massive. Uber obviously up because of this. They report tomorrow, so we'll look at those earnings. Adjusted net loss was $97 million compared to the $211 million in last year's quarter. So overall, that is improvement there. Got to give them credit for it. Definitely some good improvement. Active riders grew 3% to 21.2 million. Revenue per active rider, rose 19%. So that's massive there. That's where you see that. That's where you see that growth there. That's where you see that growth in revenue, where you didn't get any more active riders. You saw an overall revenue per rider rise quite a bit. Lyft expects to remove $300 million from its annual expense run rate by quarter four, relative to its original expectations for 2020. Okay, pretty nice. Lyft ended the quarter with $2.7 billion in unrestricted cash and cash equivalents. Pretty cool. So let's look at the earnings release and get some interesting stuff there. So overall, net loss on this company of $398 million for the quarter versus $1.1 billion in the same period last year. These numbers are astounding. To me, when you look at this and you look at Uber, who lost $4 billion in a quarter, how do you lose that much money in 3 months? It just shocks me. Even $400 million. Again, it's half of what they'd lost last year, but it's still a ridiculous amount of money lost. That's just crazy. Oh gosh, that just does not feel good. Yeah, nothing good with those numbers. But overall, again, we saw this number in active riders, but really the main difference here is revenue per active rider. Pretty cool, all things considered there. So definitely some improvement in terms of that, and that's big for them. So first quarter results underscore the remarkable progress we have made since IPO, particularly our path to profitability, as we reduced our adjusted EBITDA loss to $85 million, and that's adjusted. So again, these aren't accurate numbers, to be frankly honest with you. I look more at this net loss number, but they can adjust that however they want to make it look good. So definitely interesting. In these uncertain times, we were building on that progress by taking decisive action to reduce cost and further improve operational efficiency. We expect to remove approximately $300 million from our annual expenses by the fourth quarter. We'll see how they do it. I don't know. The other thing we need to look at for Lyft, First off, not a company that I'm 100% interested in right now just because of the lack of profitability. I'm not someone who likes to have too many unprofitable companies in my portfolio. I mean, the way they're talking, they're expecting, maybe next year, 2 years from now, they could expect some profitability. I just don't know if I'm willing to wait around, and I don't know what the rideshare market really looks like after this. I know it's going to be a diminished market. It just is, as people are afraid to go out there and do ride sharing, stuff like that. I mean, it's a post-pandemic environment. Who knows? Cash and cash equivalents of this company of $597 million. A good amount of cash on this company. Overall, from a total current assets perspective, definitely less. They sold some of their short-term investments, which is where they got that cash from. So $3.1 billion in total current assets. Not bad. Total assets in general of $5.5 billion. Okay. But then one thing important to look at here is total liabilities in general of nearly $3 billion compared to the 5.5. So again, they've got $2.5 billion more in assets than they do in liabilities. I don't think it's bad, but when we talk about a company with cash burn like this, it's not necessarily a fantastic balance sheet because they're not bringing home anything. The only way for them to really get extra money at this point would be selling their short-term investments, which again, they certainly could, and it could tide them off into a profitability state. But the question is, beyond this, where does that profit come? After we get through this environment, where does that come? Obviously it's going to be a market that's diminished for at least a couple of years, in my opinion. Not saying they're completely losing everything going on, but you'll see that active riders in quarter two, you're going to see a decline year over year. I can guarantee it. And what does that do to the stock? I don't know. Probably going to hit it pretty hard. I don't know. It's not a stock I really want to mess with right now. Just, I don't know what the ride-sharing business looks like after this, and I'm not an expert on that matter. So if I was, I would help you. But this is, again, just a garbage, since IPO down 60%, just a rough time for Lyft shareholders. I'm not saying it won't go up in the short term, but good thing for it going up, 15% after hours, right? I mean, that's positive for shareholders, but I just don't know if I'm into it. Sorry.